All right, first about the earnings season, which is all set to start now. All the listed companies are going to release their Q3 numbers. It's going to happen over the course of the next few weeks. And of course, we always begin with the IT majors. Infosys and TCS, they're at the forefront and they lead that entire pack. What's the street penciling in this time? And how did India Inc. perform in the quarter gone by? We'll get to that with our guest who's joining us to decode what the earnings season could deliver. But first, let's take a look at TCS, at Tata Consultancy Services, as well as Infosys. Both of these companies, like I mentioned, set to report their third quarter numbers. This happens tomorrow. Where are expectations pegged? For that, my colleague Anisha is joining us here in the Mumbai newsroom. Anisha, if you can walk us through what the street is penciling in when we talk about TCS and Infosys as well. Are these two going to turn in a muted quarter, the kind of numbers we're expecting from them?
Well, yes, the earnings season will be kick-started with TCS and Infosys reporting numbers. It's a seasonally weak quarter for IT companies, so that impact will be there. But for Infosys, there could be a definite weakness in margins because of the wage hike pressure that will come from November 1st itself. So there'll be wage hike pressure, plus the fact that the guidance that the company had given for FY24 had very low ask rate for Q3 and Q4 tells you that there could be a potential decline in revenue for Infosys. The deal win momentum should be steady, but the management commentary going forward regarding the leadership exits that we have seen, plus is there any trimming of the guidance of Infosys will be important to track. The stock, of course, has run up in the month of December already. Let's see whether the earnings live up to that or not. Ditto can be said for TCS as well. It's, of course, expected to be better than the kind of numbers that Infosys, Wipro, etc. will post. But for TCS as well, there's going to be a very paltry growth in terms of constant currency. Dollar revenue might actually be a decline on account of the constant currency impact. Margins, however, will be held purely because there's no wage hike impact. Plus, the BSNL deal is something that will support the top line of the company, though on the margins it will put a bit of pressure. Deal wins are expected to be between $8 to $10 billion, and the management commentary going forward in terms of the headcount addition, the calendar year 24 outlook, the client budget expectations, and how this entire artificial intelligence opportunity will unravel will be important to track. But overall, the expectations from the numbers are subdued. It's all about the commentary this time.
It's all about the commentary, Anisha, and we will watch out for that very closely. But let's decode what could come in the third quarter. Mahantesh Sabarad is an independent market expert. He joins us on India Tonight. Always great to get in your perspective, Mahantesh. You know, as ever, IT earnings kick things off. And of course, we're expecting TCS and Infosys tomorrow for their Q3 numbers. And then, of course, there's going to be HCL Tech and Wipro. That's going to happen the day after on the 12th of Jan. But what are you expecting of the lead IT numbers this time? Will they be muted because of seasonal weakness? And what are you expecting in the commentary of the managements? And very importantly, Mahantesh, how are IT stocks likely to move, bearing in mind that we're expecting the Fed to cut interest rates in the first half of this year?
Good evening, Vikram. So firstly, IT companies will definitely have a muted quarter because when we observe from a quarter-on-quarter basis, it's going to be a seasonally weak quarter. But from a year-on-year perspective, let me bring in some perspective here because normally people don't look at a year-on-year perspective when it comes to the IT companies. But here you have a situation where most of the IT companies have seen muted headcount growth. In fact, some of them would have reported a lower headcount number from a year-on-year perspective. So unlike the street expectations, we might see a positive surprise when it comes to the margin effect of because of the employee cost. There could be wage hike coming in for certain companies, but purely because the overall deployment in terms of headcount being lower, we might see a surprise margin uptick. So that's one. Number two, we will see the commentary from most of the management talking about transformation that is happening, moving from into the digital kind of space to now the AI kind of space. So that transformation could either happen with a delay or perhaps could happen with order wins coming in, but delays being forecast. Either which way, I see the results will provide a backdrop for investors to reassess the IT sector, given that last year it has fallen quite a bit in all the IT stocks, and there being a stark underperformance, we might now see a relief rally coming in.
But Mahantesh, since the start of the year, the markets seem to have lost their way a little bit after that climb up. Earnings in the third quarter is what many believe is going to give fresh direction to the markets. Would you agree with that? Or are you expecting some sequential moderation in some sectors at least because of the high base and possibly because of some sectoral headwinds?
The only sectoral headwinds that I would look at right now is from the consumer discretionary kind of spends or even other kind of consumer spends, particularly on the rural side. Because we have had a deficient monsoon, we have had weather playing up, we have situation where the rural economy is generally stressed. So barring that, we will have great results likely to come from capex kind of or capital goods kind of companies or companies who have been in the midst of expansion, irrespective of the sector they have been, because we have seen a lot of PLI-led investment commitments come in. Much of those investment commitments are work in progress, and therefore we may not see that come into the results in the form of revenues per se. But the outlook therefore would potentially look better going ahead. And now we have also another situation where the overall commodity prices are tending to soften a bit. So, barring the consumer side pressure, we will not see much of pressure coming in on the results of the other sectors. I did talk about the IT sector, and the biggest of all is the banking. The banking sector is now on a sound footing or a sound base, and there is only growth to look forward to. There could be a pressure in terms of NIMs now going forward, but overall credit growth outlook and credit growth achieved seems to be quite good.
But of course, the demand situation and perhaps that is also going to be a factor that will play out. But apart from that also, Mahantesh, a lot is being pegged on government spending. From a futuristic standpoint, infrastructure and manufacturing being some of the bigger growth drivers, are we likely to see enough of that emerge in corporate earnings of the industrials, the cement companies and companies within the auto pack?
We might see some better results, I would say, but I'll not venture ahead and say there will be spectacular results. Within these spaces that you talked about, industrials is going to be a little muted, but I would say the capex led the kind of companies would actually do better. So either it could be infrastructure companies which actually do capex related work for other companies, or companies themselves who have committed capex for their expansion. Some of these expansions would have already come on stream. Some would be most of it is WIP, like I mentioned before, but some of which will start coming in. So we might see the outlook better. Results could potentially be better as well, but don't have too much of hope in terms of they being spectacular or going beyond expectations.
Would be the outliers this time, Mahantesh, in the third quarter. Not sure how many have seen the big climb in real estate stocks coming. But if there are pockets that could surprise the markets on the positive side this earnings season, which ones do you think those could be? Will it be the oil marketing companies, the capital goods kind of plays, metals and mining? Where are the net profits likely to see the strongest growth, according to you?
Probably it's the healthcare sector which will start dominating the earnings in terms of good numbers coming in, both in terms of growth, both in terms of margins, either at the operating level or at the bottom line level. And within the healthcare sector, now we have a lot of health tech kind of companies also coming. There are hospitals that are in place now, which are listed and available for investors to have a bite at, and you have also some of the health tech companies coming in. All in all, it's not the traditional pharma companies that now dominate the healthcare space. It's also a mixture of these kind of healthcare facilities kind of companies that are coming up. So we might see the pocket of growth or surprise coming in from some of these sector, the hospitals that are there, or some of the health tech kind of companies. So I would rather look at that as the new pocket of growth ahead.
As the broader markets are concerned, when you compare the mid caps with the large caps, because the essential growth, many are pointing towards large caps right now, But when you consider the kind of earnings reports we're expecting from some of the mid-cap and the small-cap players, as opposed to what we're expecting out of the large caps, how do they stack up in the third quarter?
I think the mid-cap companies will have some bit of pressure in terms of earnings that are getting reported, particularly on the margin side. Simply because what has happened is that the mid-cap space has seen a lot of competition emerge post-COVID. Earlier, it was the large caps who didn't have that kind of competition from the mid-cap space coming up. But now the mid-cap companies have started competing with the large cap with the margin effect kind of playing up now for many of these companies. And with the background that most of these mid-cap, small caps have run up to quite swiftly in the last calendar year, one should be a little cautious about the results. You might have a situation where the company would post good results, but the stock still will start showing weakness simply because expectations are not getting met.
Yeah, decoding all the numbers that come through. Earnings season is upon us. The third quarter, how it pans out is going to perhaps give fresh direction to the markets. Mahantesh Sabarad, always important to get in your perspective. Thanks very much for joining us on this edition of India Tonight.